Next, we go to market participants of bankers' acceptance. A variety of financial institutions and players are involved in the market for banker acceptance. Bankers' acceptance, which are frequently used in the financing of international commerce, are usually short-term loan securities guaranteed by a bank. The following are the primary players in the banker acceptance market. First, we have financial institutions. Next, we have commercial banks. Third, we have investors, corporate, and the last one is government bodies.
The first reason behind this instrument issuance is to make trade financing easier. This instrument often used during the international trade transaction session. Most of the time, exporters use banker acceptance to ensure that the payment from the importers is secured. Furthermore, bankers acceptance systems allow deferred payment systems so that both parties can secure their payment. It is also subject to the regulatory guidelines and meet the industrial standards. It is very crucial for both parties to ensure compliance with rules and regulations. Bankers' acceptance can be used for managing risks. There are such risks that related to bankers' acceptance such as credit risk. The acceptance issuer might be in default on the agreement, which would mean that they couldn't afford to pay when the acceptance reaches its maturity date by choosing a reliable issuer. The acceptance bank are a second bank that could be involved in the situation. This bank has the option to approve the banker's approval, giving even more the creditworthiness to the deal. Next, banker acceptance also can be used in managing the liquidity. As we recall on the trade financing, the deferred payment system allowed buyers to secure their goods by increasing the sales for the exporters. The marketability also a lot easier with the presence of banker acceptance. They often get traded in the secondary market since bankers acceptance can make it a short-term instrument for their investor in managing their liquidity. Bankers acceptance is a negotiable instrument. They can buy and sell easily in the market. It can sell the bankers acceptance before the actual maturity date. It does seem that this is a lot easier. The ability to negotiate and transfer the instrument does ease the financial activities. The maturity date also can be customized. It can be decided by ranging from a most few weeks to months. Most of the times, short-term maturities are preferable since it has a quick response.
Okay, for benefits of bankers acceptance, first, we can access to international market. Bankers acceptance being available in various currencies. It opened up opportunities for companies to participate in global trade and capitalize on a wider range of business. Number two, increase efficiency. Bankers acceptance streamline international business operation by reducing the amount of paperwork and administrative tasks involved. This increased efficiency benefits both buyers and sellers, saving them valuable resource, money and time. And lastly, improve cash flow. Cash flow. Bankers' acceptance contribute to improve cash flow for both sellers and buyers. This arrangement help buyers manage their cash flow more effectively and sellers can access capital sooner, leading to a more favorable financial situation for both parties. That's all.
For characteristic for bankers' acceptance, first we have short-term maturity. Bankers' acceptance are short-term credit instrument issued by commercial bank. They have a relatively short maturity, usually less than a year. This makes them attractive for firms as a source of short-term capital and for investors as a short-term investment option. The maturity of a banker's acceptance typically range from 1 to 6 months. And for high liquidity, bankers' acceptance or BAs are easily bought and sold because they are traded in a liquid market. They are considered liquid assets and not greatly affected by interest rates. BA have a stable market, making them easy to trade. The price depends on the interest rate and time until maturity. As the maturity date gets closer, the price approaches its face value. Overall, BA are popular because they are easy to trade and don't have a big impact on price. Third, we have low credit risk. BA are low risk investment because bank guarantee payment at maturity. They have a short-term maturity, reducing interest rate and default risk. Reputable bank issue BAs further lowering credit risk. Central bank laws ensure compliance and capital adequacy. So BA are secure, short-term, and supervised by the central bank. And fourth, we have low yield. BA are a safe choice for investors who prioritize safety and accessibility. They offer lower returns due to their low risk and short duration. Conservative investors prefer BA for their safety and liquidity. And lastly, we have interest rate risk. It can impact BAs. When rates go up, BA yield go down, and when rates go down, yield go up. BA have a short maturity, so they are less affected by interest rate change compared to long-term investments. But it's still important to keep an eye on interest rate fluctuations when invested in BAs.
For the maturity of banker acceptance, bankers' acceptance typically have a maturity duration of 21 to 200 days. However, this might change depending on what the parties have agreed upon. It is important to remember that the parties can negotiate the precise maturity period, which is frequently determined by a number of variables including the type of trade transaction, the creditworthiness of the parties, and last one is the state of the market.
Okay, for the conclusions, bankers' acceptance are like post-date checks, but the bank guarantees payments. They are used in international trades for short payment terms. It can help be traded at a discount and help companies make purchases without loans. They are safe and liquid, making them useful for raising short-term capital. Increase trust, lower risk, and promote liquidity in the global economy. They are important for trade finance and cross-border transactions. So, it's a key for trades, capital, and economic for growth.